there, this is Tantin. Today we're talking about one of the stocks that have shocked the world in a great way. Previously, the stock market was primarily driven by index investors. However, due to a particular group of investors on Wall Street Bet, which is on Reddit, these stocks have shocked the world. These new investors intend to burn these short sellers. So far, one fund has been caught in a burn. So in today's video, we'll be talking about how these new traders managed to beat these fund managers. Before we continue, please smash the like button for more awesome videos. And if you want to see more such videos, please subscribe to this channel. In the comment section below, please tell me if you purchased any shares of these companies. Firstly, we'll be talking about the main reason why these retail investors decided to enter the stock market. Due to the pandemic, many retail investors realized that trading in the bond market is slow compared to the equity. Hence, these retail investors decided to enter the equity market. Some analysts believe that there could be a similar event in the stock market as when the bond market started to go higher as the PE ratio increases. Moreover, there's a diversion between Wall Street and retail investors. Many retail investors and analysts feel that they could not control the stock market. Some analysts are also shocked to see the move in both Bitcoin and the stock market, especially in some names. This may cause the average stock multiple to trend higher. Some retail investors even believe that the stock market is another game. Moreover, those do not know who is in these index funds. However, this causes a fund to sell out of the stock due to the rise. Therefore, there's a high chance that some of these investors will get burned eventually. Secondly, we'll be talking about the company that made headlines in the stock market. The company that we'll be talking about is GameStop. Wall Street has been watching GameStop in awe as a band of Reddit-obsessed retail investors managed to pull the stock up 1,500% in 2 weeks, squeezing out short sellers' hedge funds. A wave of at-home traders found each other on the Red Hot Wall Street Bet's Reddit chat room, whose members had ballooned to over 3 million. By motivating each other to keep piling into shares and call options, they coordinated a monstrous short squeeze in a brick-and-mortar video game retailer. Retail investors, with the help of technology acting as a union in attacking, is a new phenomenon, said Jim Bison, Chief Investment Strategist at Leaholt Groups. Many enthusiastic Reddit users have been posting screenshots of their brokerage accounts, some of it quoting astronomical returns north of 1,000% in a handful of days. These passionate investors also call out short sellers in the chat room in colorful language and unpleasant internet memes. As more people get to know about this crazy move, more retail investors started to purchase shares in the company. Next, let's talk about the business model of this company that shocked the world. GameStop is a brick-and-mortar video game retailer which is not even making any money before the crisis. As most of us purchase our games from the eShop, there is no need for this company. Just because the stock has a huge short position doesn't mean that it's a buy opportunity. So how does this affect Wall Street? Due to the crazy rise in GameStop, a fund decided to sell off its short position. Marine Capital closed out its short position in GameStop on last Tuesday afternoon after taking a huge loss. Manager of the fund, Gabe Blotin, told CNBC and Euroscotskin. The brick-and-mortar retail game retailer, hedge fund's most hated stock, was targeted by an army of retail investors who marshaled against short sellers in online chat rooms. In the Reddit forum, Wall Street Bet, with more than 2 million subscribers, rookie investors encouraged each other to pile into GameStop equity and call options, creating massive short squeeze in the name. CNBC could not confirm the amount of sources Marine Capital took on a short position. Citadel and Point72 has infused close to $3 billion into Plotkin hedge fund to shore up its finances. On last Wednesday, Plotkin said Plotkin told him that speculation about aggressive filing is false. GameStop has shown more than 400% this week alone to 347.51 apiece, driving its January gain to 685%. The stock was worth just $6 4 months ago. Investor Michael Burry said in a now deleted tweet on last Tuesday that trading in GameStop is unnatural, insane, and dangerous, and there should be legal and regulatory repercussions. Burry shocked to fame by betting against the housing bubble and was featured in Michael Lewis' book The Big Short. Elon Musk, after the bell on last Tuesday, commented on the mania on Twitter and linked to the Wall Street Bets Reddit chat room. The Tesla CEO tweeted to his 42 million followers, GameStop. The comment appeared to help send GameStop shares soaring in existing trading. So how does this affect the diversion? Previously, retail investors seldom beat these institutional investors, and retail investors normally could not move the stock in either way. However, this year the stock market enters a modern era of David versus Goliath battle. Share in GameStop has risen more than 7-fold so far in 2021, thanks to online retail investors betting against hedge funds and other institutional short sellers titans. Indeed, the stock has quickly become a favorite of online traders who invest in companies championed on the Reddit forum Wall Street Bets. This in turn has led to a wave of investors ganging up on short sellers such as hedge funds raising capital, forcing them to abandon their trade and take losses. What's the reason for this shift? The evolution of trading and technology, and the ability of hundreds of thousands of retail investors to review, analyze, and comment in real time has enabled them to do what institutional investors have long done: confer on a thesis and collaterally ride a wave by buying or selling big chunks of a company's shares. And it is not going away. Just as exchange-traded funds have come to dominate some of the largest positions on Wall Street through sheer volume, so too are individual investors, through the likes of Robinhood and other trading apps, are able to quickly and forcefully move in and out of position and work as a collective tide to counter institutional investors' bets. To be sure, the analysts expect volatility to remain a key component of the David versus Goliath kind of activity currently being seen with GameStop and others. At the same time, the analysts also expect it's a phenomenon that is here to stay and something that larger and more established players need to factor into their decision about which position to take. What happened to this chat room? The subreddit that has been tied to huge surge in GameStop and other heavily shorted stocks was set to private previously on last Wednesday evening after its online voice and messaging group on Discord was banned. In a post late last Wednesday, after new members were again allowed to join, the Wall Street Bets moderators said they have seen overwhelming interest following huge short squeeze surge in GameStop in recent days. Heavy shorted GameStop has seen its share soar in recent days as retail investors, apparently coordinating through the Wall Street Bet subreddit, has beat up its shares, creating a short squeeze. Short squeeze usually occurs when investors who have borrowed shares and sold them in anticipation a stock will fall, instead find the trade going against them. Earlier last Wednesday, the Wall Street Bet server was banned by Discord, the voice over internet messaging service that hosted it, The Verge report. Discord, which originally organized as an online communication platform for video games, hosts servers including live message channels and voice calls that focus on specific games or topics. Discord did not ban Wall Street bets because of financial fraud, but instead said it has allowed hateful and discriminatory content after repeated warnings, according to the report. On last Wednesday, online broker TD Ameritrade said that it has restricted some transactions in GameStop and AMC and other stocks to mitigate risks for its company and its clients. Due to the rise, some well-known investors decided to purchase shares in the company. Finally, we'll be looking at the stock movement of the company. Look at the growth of the stock price of GameStop. Within a 3-month time frame, the stock shot up by around 2,638%, while the market is just up by around 19.2%. No matter how much you want to burn these short sellers, there should be a limit, right? This is just mad. Thankfully, the stock came down huge after the rise. So how to keep the GameStop rally going for these excited buyers? The vivid popular storyline in the market last week portrays the massive of small fries investors getting the better of Wall Street bullies, with frenzied buying of heavy shorted cast off stocks dealing massive loss to smart hedge fund managers who had used bearish bets to abuse the likes of GameStop and AMC. There is strength in this as far as it goes, but it goes only so far as to cover perhaps a few dozen stocks with extremely high short interest. It does not imply the stock market is fit for these short sellers stampedes to be a strong or lasting driver of the investment outlook. A couple of flawed premises are at work in the simple David versus Goliath angle. For one thing, neither hedge fund nor short sellers has ruled the Wall Street playground by any stretch in recent years. Quite the opposite, in fact. While academic research has shown heavy shorted stocks have underperformed over the long term, this factor is not consistent over all periods. JP Morgan's strategies last week show that crowded short stocks have performed roughly in line with the market as a group in the past few years, before beginning to outperform strongly in recent months as the short events get rolling. The massive exposure to these stocks through options in mutual client accounts is what forced Robinhood and other brokerage firms to restrict trading in some tickets. Because of the heavy cost of posting collaterals in the clearing and settlement process that occurs over 2 days after the trade is made. With these stocks up huge and volumes enormous in recent days, it will likely require a consistent stream of excited buyers to support these shares. So in these names, perhaps the squeeze have more to go. But this must remain a pretty localized affair because the amount of short exposure across the market is at a 12+ year low relative to the total equity market value. Due to the crackdown on these short squeeze stocks, some investors move away from this trade and into precious metal markets. However, given that the precious metal market is way bigger than these stocks, time will tell if these investors could move the stock market. If these investors could move the market, it may pose a significant threat to the stock market. Hence, many investors want to know how much firepower does these retail investors have. Moreover, the Reddit and YouTube trading star known as Warren Kitty defends his social media posts that have sparked a mania in GameStop shares last month in testimony review on Wednesday, saying he was an individual investor acting only on publicly available information. The trader, whose real name is Keith Gill, is set to testify on this Thursday before the US House of Representatives Committee on Financial Services. Other than defending his action, Gill used his testimony to again make the case for why he is still bullish on GameStop. In his testimony, Gill said he started buying shares of GameStop in 2019 when the stock price declined on disappointing earnings. Plus, Gill liked that famed investors Michael Burry was bullish on GameStop as well. According to the law, this violates security laws against manipulating the markets, according to the lawsuit filed by Kristen Levin, a Washington state resident who purchased GameStop options. Grill said that the market was underestimating GameStop's growth prospects and overestimating the likelihood the video gaming company would go bankrupt. He also said that he used publicly available information to determine GameStop was undervalued and shared this view with a tiny following on social media ahead of January's huge price surge. He also believes that GameStop can expand its digital capabilities and harness its 60 million loyal members. The testimony said, when public investors read this news, some retail investors will be scared as the system is lined with the hedge funds. In conclusion, the move is unreasonable as there is nothing that is backing these companies. Even the most bullish growth investors will not think that the company could grow to its current valuation. Therefore, these retail investors are creating a man-made bubble which will pop very soon. To those investors who are watching this video, my advice is to sell off your shares in the company. With that, thank you, have a nice day. Goodbye.